Hey everyone, SoundHound AI stock investors got some huge news on February 29th as the company reported its quarterly financial statement and revealed some critical insights for SoundHound AI investors. So let's dig into these details. Let's try and understand what this will mean for SoundHound AI stock investors going forward.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the company's CFO saying that they finished 2023 with accelerating momentum, and we are seeing exceptionally strong interest from enterprise businesses, and most notably within the restaurant and auto sectors. In fact, demand for its solutions is so high that they now have a healthy wait list of restaurant merchants. That's all really great news for SoundHound AI stock investors. Accelerating momentum is excellent. That means that the rate of growth is increasing. So you're going from, let's say, 40% rate of growth to 45% rate of growth. You're still growing the business, but now that rate of growth is increasing. And that's extremely attractive when you're looking at investments. And it's always attractive when you have a wait list of customers. When you've got a backlog or a wait list and demand exceeds supply, that's always great news. And I really like to see that in companies that I'm considering making investments in. The CFO saying that they continue to be mindful of their pathway to profitability, but delivering against this demand is paramount. So, interesting statement there from the CFO that I want to break down further. What essentially is being said here is we want to be profitable, but we're prioritizing growth. We want to be profitable, that's desired, like we're trying, but driving this growth, that's what's number one priority for this business right now. We're trying to grow and we don't want to miss this opportunity. We want to capitalize on the opportunity. And if we need to sacrifice profit margin in the near term, we will make that trade-off. We will make that trade-off because delivering against this demand is the key component here. That's what we see as the paramount goal right now. And so investors that are looking for SoundHound AI to become profitable in the near term need to temper those expectations to allow for the company to capitalize on its growth opportunities. And that, in fact, happened for the fourth quarter. The company had said they were going to be positive adjusted EBITDA for the fourth quarter, but they weren't. And that's okay because they said they wanted to capitalize on opportunities they saw in the quarter, and so they missed out on their target of adjusted EBITDA. I don't mind that too often, especially when it wasn't going to be consistent adjusted EBITDA profitability. The management did update the guidance and said that for their fiscal year 2025, they will be adjusted EBITDA profitable. Now, EBITDA is already an adjusted number. It's earnings before interest, taxes, depreciation, and amortization. So it's already before all of those items. And then you're adjusting a number that's already adjusted. So it's not very meaningful profitability. It's not GAAP profitability, which is generally accepted accounting principles. That's the strongest form of profitability. That's not where SoundHound AI is, and it's probably not going to be there until 2026 at the earliest. So they saw a great opportunity to grow inorganically, meaning an acquisition, to accelerate our go-to-market motion and capture a sizable and meaningful restaurant customer portfolio. The acquisition of Sync3 clearly positions us in the restaurant AI space. It also removes a competitor off the board. So that was an interesting acquisition from SoundHound AI. It'll take a couple of quarters for them to digest that acquisition, and we'll start to see the positive implications from that acquisition maybe 2 quarters from now, 3 quarters from now. They also accelerated their investments in administrative functions, notably around their internal processes and controls. This is more of a necessity. You got to make sure you're in compliance with the Securities and Exchange Commission, Sarbanes-Oxley, and all of those back office things. It's a necessary evil you have to go through. But in 2023, they fundamentally re-architected the business. They reduced a lot of expenses. We're going to see a little bit later. The company did cut costs significantly while at the same time growing revenue. And I've been mentioning that's been an impressive story there by improving profitability, by increasing revenue and cutting costs. That's not easy to achieve. And SoundHound AI impressed investors by achieving that in 2023. So their backlog takes into account customers where they are the leading or exclusive provider and assumes a 4-year ramp to fully scale with a total 5-year duration. They have incorporated reasonable assumptions about adoption percentages with lower percentages applying to pilot and proof of concept customers. And here's where things get really murky. When a company informs you that they're using all of this fancy assumption and the ramp scale and all that to calculate their 5-year duration of their customer backlog, I tend to understate those numbers. It's similar to when companies start talking about lifetime value of a customer, especially younger companies. When they start talking about lifetime value of a customer, that's where it gets really tricky, because if you've only been around for, let's say, 5 or 8 years, how do you know what the lifetime value of your customer really is? You haven't been around that long. You haven't even been through one economic cycle where there was a recession and then growth. How do you know what your customer life cycle is going to be, right? You're making a lot of estimate, a lot of assumptions there to make those calculations with relatively little data to go on. Now, if you're a company like Coca-Cola and you're making assumptions about the lifetime value of a customer, then you can reasonably make that target calculation and feel confident in your estimate because you have roughly 100 years of data to work on, or however far back you've been collecting that data, but you've been around a long time. You know your customer habits, you know how customers respond based on their life cycle and the value they provide to you as a business. But when you're this new, like SoundHound AI, and you're starting to make these assumptions and estimates, that's where I start to say, okay, I'm going to not pay so much attention to these numbers. I'm going to discount them because I think the ranges are going to be really wide, and I don't place much importance on that when the company is so young and the data is so fresh and not going back at least one economic cycle. So I'm going to discount that data. I'm not going to take it into full consideration until there's more time under SoundHound AI's belt, until they've gone through at least one economic cycle, and then I can start to take more seriously their estimates and assumptions for their customer lifetime value there when their backlog is incorporating those assumptions into their analysis. But nevertheless, these are some critical data points for SoundHound AI stock investors to consider, to keep in mind. And of course, I will continue updating you as more information comes out from SoundHound AI. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.